Right, welcome guys. We're going to be taking a look at the Disney earnings call. Bob Iger responding to some questions and things like that on parks, streaming, just some various bits and bobs. I think it's sort of worthwhile taking a look through, just taking a look through this really and just seeing how they sort of delude themselves into bits and pieces. And whether they really know what's going on with their business. I don't think they do, as an FYI, but I think it's worthwhile covering it, as I said. So hit subscribe if you are new here, guys, and do turn those bell notifications on. So basically, 8:07 a.m. pre-market trading for Disney ahead of the earnings call was up. So that's interesting. You know, their trading has been going down. So not great, but it looks like they were all sort of hedging their bets on this announcement. So Bob Iger has announced a new Disney park in Abu Dhabi, which later actually Abu Dhabi and Disney go together like chalk and cheese. I mean, they're two polar opposites in terms of what they believe ideologically. It's quite comical. But Bob was in the UAE for the call, which is, that's going ahead. He also said that Disneyland Abu Dhabi will be authentically Disney. I mean, it's not going to be. Okay, because authentically Disney, not that there is an authentic Disney. They have their beliefs because they think that it's sort of politically and financially expedient for them at any given time. So there is no authentically Disney. But he claimed that the park will combine classic Disney stories and characters with the cultures and tastes of the Middle Eastern region. Interesting. Disney will oversee design and license the IPs, while Miral will foot the bill. He said that Imagineering is already working on the new park. Our focus must always be on building for tomorrow. Amazing, unless it's their films, of course. So Bob touted the success of Disney Experiences division, crediting domestic offerings with much of that success. Then he continued to brag about the success of Thunderbolts. That's not a success. That's a financial failure at this point in time, stating that it's the #1 movie in the world, which is true, but profit and loss, right? Like their expenditure on it, they haven't made their money back yet. So that's interesting that he's trying to say it's successful. It's successful in the regard that it is #1, but not successful financially. So yeah, bizarre, but okay. So Iger then opened the meeting to questions, and a Morgan Stanley representative questioned the company's streaming strategy. He asked if the company is seeing benefits to its broader content strategy within Disney+. Iger stated that the presence of Hulu embedded in Disney+, with the addition of sports content, are having a positive impact. So basically, Disney as a brand is crap, and Hulu and sports are what's picking it up. Epic admission. So he claimed that churn was down as a result of those two things. Iger also called it a fully integrated experience between Disney, Hulu, and live sports. He called it unrivaled in terms of variety, which it may be, but okay. Although I think Amazon's pretty good for stuff like that. Not their offerings, but in terms of the variety between it. I mean, I think Amazon shows like horrors and sports and things like that, but I could be wrong. And Netflix is doing their live sports now, aren't they? So anyway, so Wells Fargo representative asked how Disney settled on Abu Dhabi as the location for the new Middle Eastern Disneyland. Iger claimed Disney studied the region very closely and called the selection an endorsement of the region. Iger noted that trips to Disney's other 6 locations were lengthy for people in the Middle East and said that Disney wanted to bring the experience to that region. Interesting. I don't think that that's correct, but okay. So Bob said that of all the places Disney could choose for its new theme park, there was no place better than Abu Dhabi. He referred to it as the right choice. Again, why, but okay. Probably some kind of tax break, obviously. Iger was asked how confident he was about the company's upcoming slates and whether Marvel could continue to be a major player for Disney in the wake of Thunderbolts. Iger ran down the upcoming slate for the next 2 years as it pertains to Marvel. Iger said that in their zeal to flood streaming with more content, he learned that quantity does not mean quality. He admits that Marvel lost something over recent years, but the company's committed to enhanced quality for Marvel films. What does this even mean? I mean, this is just nonsense, isn't it? Like, actual nonsense. What does he mean by this? So Iger was asked if Disney was merely licensing out its IPs for Abu Dhabi theme park. Iger admitted that Miral is footing all the capital and that Disney will be making a royalty. So it's not actually a Disney park, is it? This is them. It's like a franchise. Wow. That's interesting. So he said that he's not concerned about the company's commitment to quality. He called it a licensed arrangement, but noted Disney will be there to ensure the quality that people are used to. That just sounds like a franchise, mate. Iger noted that next week there will be an announcement regarding a new name and pricing for ESPN flagship services. Eventually, I've got to stop using that word, he said. So there was also a question about the demand in the US market for Disney experiences and how that's changed since the last quarter. Of note, the market is currently being upended by Universal's Epic Universe. So Disney claimed that the outlook for experiences is strong and touted resort bookings for the third and fourth quarter. They claimed attendance was still good. Disney declined, though, to comment on projections for 2026, so that's not great, but okay. They were asked about the softness of Disney's theme park market in China. They claimed attendance was still good, but per capita spending was down. That's not good then, is it? So the Disney's earnings call continued with a question about the international market coming into Disney's domestic theme parks. The company representative stated that the number has not gotten back to pre-lockdown levels, but it's still in double digits. That's interesting. Not good. They said that they're more than making up for it with domestic attendance and described attendance at the parks as being terrific. Iger was then asked about additional international locations for Disney parks. He said that he's not ruling out the possibility of another location, but noted that there are no immediate plans for the 8th park. He claimed that they were investing $30 billion in Florida and California experiences. It's not exactly a lot, but okay. Fine. And then the final Disney earnings call question was on the $30 billion expansion, specifically how it will drive attendance and improve the guest experience. Iger claimed that the guest experience is more important to them. Well, good, should be. He noted that they're looking to add capacity so they can let more people in without sacrificing the experience. He noted that there's a lot of land and a lot of IP, but then touted the announced Walt Disney World and Disneyland expansions, which don't use much additional space. So a bit of a contradiction. Most of the announced areas will use existing land, tearing down classic attractions like Muppet Vision 3D and Rivers of America. So not exactly solid at all, to be honest. And then also, just as a quick FYI, so via Variety, Bob Iger has basically come out and been like, oh, actually, frankly, we've all admitted to ourselves that we lost a little focus by making too much. By consolidating a bit and having Marvel focus much more on their films, we believe that will result in better quality. I think the first and best example is Thunderbolts. I feel very good about that. So he's trying to say that Thunderbolts is an example of their brand new quality that they're going to be making movie-wise. It's not a great example, but okay. There you go. Not great earnings call. Disney, we'll look at Disney stock now and see how that's doing. It's fine, I guess. So it is up. Yeah, not bad. It had cratered for a while. I mean, still isn't solid. But down in the 84s, it's slowly been climbing, to be honest. But now, what'll be interesting, it looks like people are buying in because of the Abu Dhabi thing. I'm going to guess this may end up cratering again, but it's not bad. I am surprised, actually. Like, I'll give them their dues. I am surprised it's gone as high as that. Interesting. I don't think it'll get to... I could be wrong, but I don't think it'll get to the previous levels that were up here. What, in like November, 115. I don't think it'll get there, 117. We'll see. But there you go. We're definitely not going to get there anyway. But this could be a turnaround for them. Yeah, it'll be interesting to see what happens, actually. But this tends to happen on an earnings call. It does tend to spike. So there you go anyway. What do you guys think? Let me know down below. If you're new here, do hit subscribe. Turn those bell notifications on. Bye now.